We have a massive CCIV update video to get into. We just got some new news as of today that does help our cause here as long-term investors, or if you have a trade in this like myself. But we have to go over the ortex data first things first, then we will get into the actual news, a little bit of the bullish option chain activity that has been going on, as well as my personal position in CCIV and the specific trades that I do have in this, because this is quite frankly a high conviction trade for me, as well as a high conviction long-term pick. So short interest change of negative 2.34%, return shares of 2.99 million, borrowed shares of 1.64 million. That is a borrow change of negative 1.35 million shares. So that is how many shares we did have covered. And keep in mind, this is T+2 settlement time. So most of this data, not all of this data, is coming back for 2 trading days ago. So keep that in mind. But the estimated short interest is at 23.44%. Mind blown. That's outrageous that hedge funds and institutions are taking on massive amounts of risk. And once we get to the end of the video, you will know exactly why this is just flat out stupid for hedge funds and institutions to do. But that just makes our attendees fatter and come out nicer, right? So it's overall a great thing for the movement. Estimated current shares that are sold short of 48.51 million. Share utilization, this is something I have to point out to you guys, is at 99.99%. So essentially 100% of all the shares that are willing to be sold short or lent out are already sold short or lent out. So not a lot of availability to actually get your hands on CCIV shares to sell short. So that is all the information that you guys do need to know about. That is everything that is important here. I will actually pull up the average days on loan, which is 28 days, which does put us back at about this, $20 range, even about $19 range. So shorts aren't significantly underwater on their positions yet. Yes, they are down, but they're not down to a certain extent where it's like immediate margin calls, right? So it's could be worse as far as the shorts are concerned, but once you get to these key thresholds we will talk about a little bit more into this video, you will actually see a lot of shorts that have to cover their positions. But I do think they're not going to drag it out as long. They're just going to cover their positions because CCIV has the potential to go wild here. So this article, bullish options order flow and a new production timeline update from Lucid Motors. Churchill Capital Corp shares may finally be primed for a bull run. It says, as per Form S4A filed by CCIV with the SEC last week, the 23rd of July remains the assumed closing date for the merger with Lucid Motors. We've noted repeatedly that the broader SPAC market has again started to outperform in the run-up and the immediate aftermath of the crucial merger vote. This is exactly what I've been saying on this channel for the last couple of weeks, and now you are seeing it in articles, and I do think that is actually how it's going to play out. That is why I do have trades in this. But it says, where the SPAC shareholders approve the business combination agreement with the intended target, because yes, it's not a 100% guaranteed, it's pretty much a 99% guarantee that this will go through, but everybody that does hold CCIV shares will have to actually vote on this, and then if everybody does vote on it, or the majority of people do vote on it, it will go through. The only time this really doesn't go through is if you're close to that that reserve price, right? For $15 it was, or I should say CCIV was $15. Most SPACs are $10. So if you're trading at a sub $15, the merger is not going to go through. If you're trading at $15.50 or $16, then it's really up in the air as far as which way investors will go with this, but we are firmly over that $15 mark, which is where CCIV shares are backed at. Consequently, the bullish nature of CCIV options order flow is a reflection of these expectations. Let's delve deeper. As per the tabulation by Market Chameleon, the 5-day and 50-day average sentiment of CCIV traders remains predominantly tilted towards the bullish side, and this is a heavy tilt to the bullish side. Take a look at this, guys. For the 5 average days, we have 22,000 bullish contracts. We have 3,600 bearish contracts. That is 86% that is bullish, 14% that is bearish. As far as the 30-day average, we have 36,000 contracts, 36,500 contracts that are bullish, and almost 5,500 that are bearish. That is 87% bullish compared to 13% bearish. And that is how I felt on CCIV for a long time. So it's nice to see see it reflected in the options. And essentially, options and the stock itself are telling you a story. If you can read what is going on in the option chain, you're more likely to win on your trades. Bear in mind that Market Chameleon considers call options bought at above market prices as bullish. It also considers put options bought at above market prices as an indication of bearish sentiment. Nonetheless, this tabulation does ignore complex orders that are often a part of elaborate hedges. So that is a good thing, because you don't want to look at all this information right on the option chain, and you're going to see a lot of hedging that is going on. So this is giving you a clear indication without the hedging of where the actual sentiment does stand, which can be important, especially if you are trading options. Now it says, given the assumed closing date of the 23rd of July for the merger between Lucid Motors and CCIV, that expiration date has gained extraordinary importance. The snippet below, again sourced from Market Chameleon, details the open interest of the options expiring on the 23rd of July. This is very small, so I'm just going to give you guys the little spiel about it. For CCIV, July 23rd, the open interest in the last 30 days is 80% calls and 20% puts. So we have a huge call to put ratio, and people are expecting a lot of movements. But even on the July 16th expiration date, we have calls for bullish calls of 111,000, and then we have 28,000 puts. So we see a lot of momentum. Even into August, we do see about 68,000 puts and about 118,000 calls, which you can expect some people are going to be trying to play the potential downside after the merger. But I don't think that's going to be the case, because like I've talked about on this channel many times, if you have not heard this before, this might change your overall opinion on this situation. Now, I'm not a financial advisor or a financial planner, so come to your own conclusions. But the reason I think CCIV, in my personal opinion, will rally after the merger, given the fact they are the only 500-mile range vehicle. So if you want that superb range, you're going to be forced to get a Lucid Motors, as well as Rivian just came out with a $70 billion IPO or suspected IPO valuation, and CCIV is only valued at about $35 to $40 billion. They are both pre-revenue EV companies, so it does beg the question that CCIV is undervalued. But the biggest thing here, guys, is CCIV, since it's $15 private investment price, right? People that have a lot of money could have invested at $15. We have not come back even close to $15. The closest we were at was $17. And if you missed out on that first offering and you want CCIV shares, there's still that 1% risk it doesn't go through. So where it currently sits, if you lost everything back to $15, if you were an institution, hedge fund, whatever the case is, and you were buying shares today, you would be losing or risking to lose 40 to 45% of your investment. That's not feasible for a risk to reward ratio to even do. So, quite frankly, they're not going to be doing this. If you deposited $10 million into this, you would lose $4 to $4.5 million. It doesn't make sense. So I do think you'll see a lot of institutional investors piling into this once it actually does merge. But it says, on the fundamental analysis front, CCIV has just filed a new Form 425 with the SEC. That update details that Lucid Motors has now garnered over 10,000 reservations for the Air EV and has already started the production of quality validation builds. The company plans to ramp up the production of the Air EV through 2024, while also launching the Lucid Gravity in the second half of 2023. So this is huge news. We were waiting on this update as far as the actual reservations, and 10,000 reservations. It's not clear in this if these are the $69,000 vehicle or if they are the $132,000 vehicle. But either way, if you just average it out, we're looking at almost $1 billion, if not a little bit over $1 billion in potential revenue if these reservations do actually come to fruition. And I think what really made CCIV pop today was the fact that they have already started production of quality validation builds. So my personal opinion is they're going to shoot for this news or to come out, right? Or a delivery date to come out either before the actual merger or right after, because you guys got to remember, Peter Rawlinson, the CEO, he is paid mostly, he said his words, by stock options. So he said he has a high incentive to make the company perform as they have said, right? By delivering 22,000 vehicles next year, by hitting this $22 billion revenue per year goal by 2026, he has to meet those obligations to essentially get most of his pay. Now, as far as my personal position in CCIV, keep in mind this is a very long-term position for me, and from my calculations, by 2026, in the next 5 years, if they can perform and be doing 22 billion in revenue per year, that would give you about a 20x from here. That would take my position from $3,500 to $70,000. So I would like to build this out to $50,000 within the next year or two, and then eventually, right, go to $1 million, whether that's in 5 years or even 10 years. I can afford to be patient here, and it is really risk on for my portfolio. But don't copy any of these trades. It's not financial advice. These may lose money, but obviously the shares in the long term will probably do good. That is not advice, but I think they will do good at their current valuation. Now, market value of $3,773.84, total return of 1.28%, my average cost of $23.14, portfolio diversity of 10.82%, and I do have 161 shares. Total return of negative $18, down 5.10%. I do have a CCIV $30 call for August 20th. I like this because you're getting closer to the money, so you'll be able to benefit a lot from big moves that we will see, but you also do have that extra time to hopefully get, obviously, the merger day, right, and the vote day, and then the actual delivery date confirmation. So I think that'll easily send CCIV well over $30 by then. That is why I like that trade the most. And then I have a CCIV covered call, and that is for July 9th. I wanted to do this in the sense of why I got July 9th, because I didn't want to catch some of these catalysts, and this was before the actual news did come out about this suspected merger date. So I'm really glad I went with this option instead of other further out options, because I collected $120 in premium. It is worth $14, so I am up $106 on this trade, up 88.33%. And then I do have CCIV $40 calls I bought for $141. I am down 36.17%, or $102. I bought two, obviously expiring August 20th. I like these two, but getting to $40 is a little bit further out there, right? Obviously 30 to 40, 30 is closer to the money, 40 is a little bit further out there, but I do expect to benefit from this rally that I do think we will see, mixed with a short squeeze and potentially a gamma squeeze, and all these catalysts and institutional investors that are piling in after we actually do merge into Lucid Motors. I do expect these will be great options as well, and then I will eventually flip out of these and go into some more longer dated calls, probably 2023, hopefully 2024, if you know, depending what does happen with this and the time frame that is provided. But that is pretty much all I do have for this video. That is the trades, that is the ortex data, the news that you guys need to be aware about. But like I said, not a financial advisor. Don't copy any of these trades. You may lose money, I may lose money. This is for my personal risk tolerance, right? I'm playing these relatively small to my portfolio just in case they don't actually happen. You're not losing a ton of money. That is the best way to trade options. But with that being said, make sure to check out the link down below for public. Get up to $70 in your choice of free stock. No need to even link a bank account or even deposit a single dollar. I got $30 of Beyond Meat, $50 worth of Tesla. I've got $30 of Beyond Meat a couple times. So you guys might as well roll the dice and do that. And they are one out of two other brokerages that do not route your order flows to Citadel. The only other two is Fidelity and Merrill Lynch, and obviously Public. So if you guys are not signed up with them, I love the platform. You guys can see what I am personally invested in, as well as if you guys want to stay up to date with these trades that we are making as far as long-term investments, options trades, or crypto. Make sure to check out the link down below for the buy and sell alerts. These trades literally pay for the cost of that. But that's gonna do it for this video. Make sure to hit that like button and subscribe to the channel as well on your way out. And until the next video, you guys take care.